Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So, we are here at marketchameleon.com checking out the unusual options page, and I like to look at this quite often to see where the action is. What I typically do is sort it by volume to see where most of the sort of the biggest option trades are occurring. You can glean a lot just from seeing where a lot of the action is and then breaking it down to something as simple as just calls and puts. Generally speaking, more call activity is more bullish, more put activity is more bearish. You can see NIO here up 12% and about 70% of the action is on the call side. Almost 2 million options traded, which is about 4 times as much as normal. You can also see the notional amount of the trades. So a lot of good information you can look at right away. You can kind of scroll down and see. So NIO is moving in response to this XPEV, which is another Chinese electric vehicle company that reported much better than expected earnings, much better growth. You can see that stock is up, almost 33%, and that has taken the competitors with it higher. So NIO would be a competitor that suggesting that NIO's earnings coming up here on November 17th might also be better than expected. There's even another one here, Li, that is another Chinese electric vehicle company that has earnings coming out here. By the time you see this, they will have come out, and you can see that is also positive. So this XPEV earnings are pushing up others in the industry, which is not an unusual thing to see. Obviously, if electric vehicles are selling in China, that is good for all the electric vehicle companies, assuming that they have a product that people want to buy. So breaking down NIO a little bit, which has just been one of the hottest stocks on the planet lately. They've had a lot of good news. You can see trades. Once again, I like to sort by quantity. Now we're starting to get, so NIO used to be something that was, trading in small lots and more of a retail type thing, but some of the size here suggests that institutions and such as funds might be getting involved. So looking at this first one up here, January 2021, so next January, looks like calls were sold at almost $6. So something like this could be actually the open interest is lower than the quantity. So this is an opening trade. This is probably done versus stock. It may not have been done at the same time. So you can see that it's not a stock contingent. So this wasn't a covered call, but someone could own the shares and then decide that they want to sell calls against those shares. And this would still be a moderately bullish trade, considering that it was sold at the 55 strike and the stock is at, about 46 at the time of the sale. So that if they own the stock, they can make money up to 55, and meanwhile they're pulling in, almost $6, which is, a lot of premium here, almost, 2.7 million, 2.6 million worth of premium brought in. So, so some of these here are probably, some of these call trades, if they're sold, they're probably closing trades, people taking profits off the table. Some of these larger put trades might be hedges against people who own the stock, particularly with earnings coming up. So interesting to see, but this, generally looks like very bullish activity in NIO. And you can see here's NIO. Look at this thing. It's just shot up. It hasn't been listed for very long. Since the stock, there was a reverse merger, and it's, pretty much taken off along with other electric vehicle companies. So if we look at that particular trade, it was January, just about 2 months to expiration. You can see that we'll see that 55 strike. It probably traded here. Yeah, ended up trading almost 8,500 times. Open interest was only 3,700. So a lot of opening action. You can see it's already up here to 725. It was sold at $6. So even though that trade is a loser, the person's likely making money on the stock going higher. So they're probably fine with that. as long as it doesn't go above 55, they could still collect all that premium over the next 2 months. So something like that would be so this would just be selling it, but selling the calls, which you would want to do in a stock like this on their own. You'd want to do it against shares, something like this, where you would do a covered stock where you'd buy the stock and then sell the call, and then lower the price of your basis to something like 41 as opposed to 48. So that's not a bad trade, assuming you think there's a cap on how high it's going to go. If you think it's going to go up to 100, you probably don't want to sell calls. However, at this point, the valuation is pretty extreme, so it seems like a decent opportunity to sell calls if you think there's also a floor on how far it's going to fall. If you think this thing is going back down to 20, you probably don't want to use covered calls because you own the stock. If you think it's going to go to 100, you probably don't want to use covered calls because of the cap. So this is sort of like a moderately bullish trade. If you think it's going to go sideways, drop a little bit, go up a little bit, then this would be a good trade to use. So we do directional type trades. So that's just a recommendation. That's just an idea. But if you're looking for actual recommendations, I do call and put buying in my Option Floor Trader Pro service, which you can find the link on this page for that if you are interested.